And we can see it from the charts. We can see from the money supply. I'm not sure if you've seen the charts, but it dropped for a bit and then it came back up. And it's going to probably skyrocket at this point. What do you think
Yeah.
of that?
Yeah, absolutely. I think Lawrence Lepard shared a chart like that the other day showing the rate of inflation since the 70s, and it was pretty much like a 45-degree angle. Um, and what they saw is even with the reduction in M2 over the last couple of years, it hasn't even come back. It hasn't even been like a reversion to the mean, right? So we're still way above the mean because the angle of the pace and rate of change that we saw, yeah, there you go. So you could even from just 2000, you can just draw a line with your eyes up, going up. Something happened in 2020. The rate and pace of
2020,
inflation
yeah.
has now changed. We've gone from that 45-degree angle now up almost to like a 65 to 70 degree, maybe even more than that. My degrees could be off a little bit, but now you can see we haven't even reverted to the mean. If you keep that 45-degree angle going, we are still way above the mean, and we are going to be moving into a time period where the government now doesn't need to increase its deficit spending to service the interest because the interest rates are going back down. But now it's going to need to spend uh, a substantial amount of money, even more so than the $1 trillion it's spending on interest to revive the economy because we've demand destroyed the economy. And if they don't do that, I would say just look at Venezuela. Just in Venezuela, they destroyed all demand. The only demand there was for water and food, and prices still went up because the source of inflation is not the economy; it's the currency.
Yeah. So you were saying that there hasn't been an economic fallout. I think the only reason for that is that people are just putting more and more debt. They're putting more of their expenses on debt. And like you said, credit cards are increasing, but eventually they're not going to be able to pay those back,
Yeah.
right?
Yeah, absolutely. Well, yeah, I mean that's the definition of kick the can down the road. So
Yeah.
a lot of people say, "Oh, well, when we raise interest rates, people borrow less money." Yeah, but credit's at all-time highs because people are struggling even at the higher rates, as you said.
Yeah.
But I hate when people say that because what they're saying really is that what we the people do is actually more important than the government. Well, household credit is $1 trillion. One, just over $1 trillion. The government is $35 trillion in debt, and they've promised to spend $217 trillion over the coming generations. So you're talking about roughly 300 trillion versus 100 trillion, or just 1 trillion. So 300
Yeah.
times more debt added by the government than we the people. And then you think raising interest rates on we the people is going to solve the problem? The Federal Reserve has been so busy fighting the economy, they should have brought the fight to government spending. And if they had done that, it would have been a much more effective way, a much more secure way to understand that the $35 trillion we see in debt there. And then on the bottom right, excuse me, I was misspeaking. Is that 219 on the bottom
It's
right
been,
now?
yeah, it is. It's been going up like crazy. 219.
Oh
This is
my
what
gosh.
CJ is referring to. This part right
That
here.
is
Oh,
that is
sorry.
unbelievable. That is
But it,
unbelievable. 219 trillion plus the 35 trillion. And they want to talk about how we the people are borrowing 1 trillion on our credit cards and we're the problem. That
it it's
mm,
like getting people to use paper straws, but then having the container being plastic, right? I mean, it doesn't really do
yeah,
anything. I was
it doesn't.
like when you go to there are certain restaurants where if you go, you get a drink in a plastic cup and they give you a paper straw. It doesn't make a difference.
Yeah.
But that's what this is. People they're trying to lower the interest rate. Sorry, they're trying to increase interest rates for people, but people are already so far in debt that their debt's just going to keep increasing, right? And
Yeah.
I was looking at somebody posted something where the interest rates for variable rate mortgages in Canada have gone up so much that people's amortization doesn't even say a year anymore.
Oh,
It's over 30 years because they've
oh my
added so
gosh.
much. The interest on their payment is more than just if they put anything towards the principal. They have nothing they're putting
Wow.
towards it. Everything's going towards interest essentially.
Yeah,
And
that's so sad.
that's that's what this interest rate increase is doing. They think that okay, people are going to stop spending. But I mean, at the end of it, I think what's happening is people are just losing hope, and they're
Yeah.
just seeing that the value of my money keeps decreasing. Everything keeps getting more and more expensive. So who cares? At this
Yeah.
point, there's no point in even trying to save. And then you can see here, tax revenue 4.9 trillion.
Yeah.
Their
And
actual spending is
they have that going up, but
yeah,
uh just a quarter or two ago that was actually going down, and I'm not
yes.
sure of the accuracy of that. I've been watching this US debt clock for over a decade, and I really believe at some point in time the ownership changed hands, because there's been a few
Oh,
different things they've done here, specifically on the so in other words, what I'm trying to say is I'm not sure that tax revenue is actually going up, and
this
I
right
don't
here.
think it's going up. Yes, and that's really important because that's the asset side of our balance sheet that needs to balance out these liabilities, and the people
Yeah,
can feel it, but the government is not one single entity. So the government's going to recognize it last. So there's no stopping this train. That's where that saying comes from, because the
yes,
government isn't its own entity and it's not going to figure it out until it's too late. But I personally believe that those tax revenues are actually going down, not up, which
right,
creates an even bigger problem for the United States balance sheet, which I do want to touch on actually, because I think People's Reserve Bitcoin bonds are the solution to the deficit on our balance sheet. We have liabilities outpacing the growth of assets, but we
right.
also have a need to protect principal, especially when it comes to Social Security. When you were on U.S. debt clock, that Social Security was upward of 27 trillion.
Yes. Oh,
Uh,
sorry. Let me go back, but keep going. Yeah.
and another thing they changed actually in that bottom right section is like the dollar to gold, dollar to crypto they added. Um,
Oh, this
over
part.
on the
Oh, here.
far right. Yeah, yeah. See, so this never used to say 406 to 1. It used to just be like the dollar price per ounce. And now they have it for
Ah,
now and for 5 years and 10 years out based on those different projections of the budget. But these numbers are way off. And I've been watching those. Probably like 4 or 5 years ago, the dollar to gold ratio was already above 15,000. And now
sorry.
both of
Dollar to
their,
gold ratio. Where? Oh, here.
yes, yeah, it was above 15,000. Now
Wow.
they have one at 39 and one at 12. So they changed. It's a lot like CPI. You know what? Let's change things up a little bit. Let's look at this a different way. And analytics aren't that useful if you keep changing them, because you can't
Yeah.
measure trends. You can't measure those things. So, this is unbelievable that it's gotten to this point. And we actually, you could see Social Security. That's what I was talking about, the $27 trillion there. What's interesting about Social Security is that it's actually not part of the U.S. Treasury balance sheet. The Social Security is a fund. It's actually two funds, and they're their
Mhm.
own entities with their own balance sheet with assets and liabilities. Liabilities being receivers, and the assets being those who contribute. So the problem with Social Security, and everybody knows this, but Trump hasn't talked about it. Kamala, I don't even know. I don't even know if she knows about it, to be honest. But none of the politicians are talking about it. And the reason is because right now there's no solution to this problem. The solution to this problem has been we're going to keep increasing the retirement age. And in real terms, right? Not nominal terms, but in real terms, we're going to keep reducing the benefit. In other words, the payment you receive from Social Security is going to increase according to the cost of living adjustment, which is tied directly to CPI. So the average payment this year was 1,800. The average payment next year might be 2.5% more than 1,800, but prices went up 11%. So the quality of life and the standard of living that Social Security can provide is crashing and burning, because the increase in the benefits is not keeping up with inflation. So therefore, in real terms, the value of what you're getting back is less and less and less over time. And there's really no way to fix that, because the liability side of the balance sheet is growing much, much faster than the asset side of the balance sheet. And you can't just take Bitcoin and add it to that side of the balance sheet, because at some point in time, and we're kind of getting to that mark now, at this point in time this year, Social Security paid out $100 million more than it collected. So it's already
Wow.
going net negative, where this is already a problem here today. But at some point in time, you can't just add Bitcoin to the asset side of the balance sheet, because you're gonna have to sell those Bitcoin in order to meet the liability to pay out the receivers. So this is where the People's Reserve Bitcoin bond comes in as a new product, new financial product built around Bitcoin equity. built around Bitcoin, the most pristine form of collateral in the world, in order to fix some of these issues. And what we do at People's Reserve is we take Bitcoin and we package it into what we call a principal protected note. And I'll just use $1 million to keep the example. Well, let's go to $1 billion so that at least it's more realistic to some of these programs,
Hmm.
right? Because
Yeah.
$1 million, they spend that $1 million every second, right? So if the Social Security was going to do like $1 billion Bitcoin bond, or what we call a principal protected note, we call it Bitcoin bonds because it's easier for people to understand. But in actuality, that $1 billion would be raised by the Social Security tax. So they would collect $1 billion in the Social Security tax, which they would then invest into the principal protected note or Bitcoin bond. 80% would go into 5-year US Treasury notes and call it 4.5%. The other 20% or 200 million would go directly into spot Bitcoin. And that Bitcoin would be held by the fund itself, because now the Social Security Fund, which is its own separate entity, holds the Bitcoin bond on the asset side of its balance sheet. Now, what's really important here is over the course of 5 years, the 800 million that you put into the US Treasury notes, they mature at a $1 billion value. That's where the principal protection comes from. So Social Security can't go net negative, right? They can't hold through a Bitcoin cycle and watch that value go down. There really can be no downside. And that's what the principal protected note does. It eliminates the downside, because even if Bitcoin goes to zero, which you and I know is not going to happen, but even if it did, some of these big fund managers, people in government, they believe that's a possibility. So if Bitcoin went to zero, you still have the $1 billion of Social Security tax that you collected, because the 800 million turned back into the 1 billion through the debt note. What's left
Right.
over is the performance of Bitcoin. And this is where it gets really interesting, because even if the price of Bitcoin goes down 50% over the next 5 years, which is unprecedented, there's no reason for that to happen. And I don't anticipate that to happen, just like I don't anticipate it to go to zero. But let's just
Right.
say it did. For some reason or another, it went down 50% in the next 5 years. When you combine that performance of negative 50%, you now have $100 million of Bitcoin. Well, when the note matures, you sell it. So the note matures with a value of 1.1 billion. In other words, that's
Yeah.
10%. So in simple interest terms, 10% divided by the 5-year note is 2% APY. So even if Bitcoin goes down 50%, you're still getting 2% APY on a principal protected note, aka Bitcoin bond. Now, what's interesting is the Social Security funds last year in 2023, their effective performance rate was 2.4%. So, what's the risk reward of what we're getting here? If they do a Bitcoin bond to fund Social Security to try to save this, or at least maybe you just do it to end the program. That would be what I would call for. Let's recapitalize Social Security so that we can end the program, and then let people save and invest in their retirement on their own means. But at least the promises we made are not going to be broken, and we can let this thing come to an end. So if Bitcoin price stays the same, you're at 4% because you had 200 million and 1.2. So it's a 4% APY. That beats. So if Bitcoin price stays the same, you beat the performance of the existing fund. Now, if Bitcoin does what you and I and people who are delivering orange pills understand and believe it's going to do, and it goes 5x or 10x, you're talking upwards of 20 to 40% APY. That is a solution to fixing Social Security. And not, again, I don't want to fix Social Security to keep it around. I think we fix Social Security in order to come through on our promises and then end it. But there's no other solution for this. There exists no other solution for this. And there never was a solution for it, because we're only in year 15 and we're just now starting to understand the power of engineered money and how we can
Yes.
leverage that engineering to fix some of the problems that this fiat system has created for all of us.